Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Eid Mubarak to you and your families. I hope you had a wonderful day, InshaAllah. One of the things that I've been trying to do for the last 4 weeks, but I have not had the energy to do it, is this video. There are so many new members of the community. I've been asked so many questions on the Patreon, on a personal email and so on about, general investing. Some people have said we're completely new. I've got a bit of money. I don't know what to do, where to start and so on. I've kind of directed them to some older videos and so on to kind of help them. But I just want to do this set of videos focusing on just ETFs. Now, ETFs have been one of the alhamdulillah, the main ways a lot of us can invest. There's not that many ETFs that we can invest in, but they are getting better. They are getting, we're getting more of those ETFs, and I will explain in a second what ETFs are for those who are completely new. But ETFs is just helped us a lot, alhamdulillah. And of course, not everybody is like me in trying to find the stocks and do the research and whatever, and of course it take a bit of a gamble in a way when it comes to individual stocks and so on. Some people like that passive way of investing, which is just buy a basket of stocks and just completely leave them alone. So my plan for these videos are just to kind of show you a few things. So what is an ETF? Just a quick overview, and then talk about 6 Sharia compliant ETFs in this video, and then we will take it from there. There's 2 more videos to come up for the rest of them, and then we're going to talk about the performance up to this year. So for example, for 1 year, so we started basically I've looked back how much they were trading a year ago, and I've taken that into consideration plus dividends or so on, and I will show you exactly if you bought certain amount of shares of any of these ETFs, how much you would expect right now. And then you can compare it with individual stocks that you own. I bet you some of them have done way better than actually some of the stocks that I own for almost 3-4 years. And I'll show you exactly that in a second. Before we get to all of that, I would love you and genuinely would appreciate if you can just press that like button. That's all I ask. If you could do, the subscribe if you haven't already, of course do that, please, because that helps the channel as well. And if you are generous enough and you want some extra bonuses and so on, then of course go into the Patreon account where you can actually get to all the buys and sells, all the ETF trackers, and then you get private Discord access to where a lot of brothers are sharing good practices and sharing their own buys and sells and helping each other, of course. So yeah, so just join us in the community if you can. That would be absolutely wonderful. So the first thing I want to do is I want to look at individual ETFs, but before I do that, I just want to mention a couple of things about ETFs. ETFs are a basket of stocks. So what they've done is these companies that create the ETFs, they put together all the Sharia compliant, they run their own screening of Sharia compliant. Of course, they liaise with the scholars, Islamic scholars, to make sure that these are compliant. And if you look at the details, normally they have someone on the board that actually signed it, a scholar from from Saudi Arabia, from all different countries, that have actually looked at this basket of stocks and said, yep, that's absolutely fine. And so because it's a basket of stocks, that could be 100 stocks, 200 stocks, 300 stocks, and then you just one ticker and you buy basically one share of that, half a share, however many you want, okay? Every single week, every single month, however long, and you just hold it and just let it grow. In a way, it's better than actually buying individual stocks. What I mean by that is I had a company called 3M not long ago in my portfolio. That company has been sitting in that portfolio for over 3 years. And of course, I got some dividends, but at the end, I had to sell it because the company was not literally doing what I wanted it to do. And I was down 1,500. An ETF, and I lost that 1,500. An ETF will not do that. So if that was an ETF, they will do that job for me. They will get rid of it, okay? They will rebalance it. I don't have to do that. And that's the risk that we take when we're buying individual stocks. And also, it's difficult to go through every single company. This is just the S&P 500. You got the Nasdaq, you got the Dow Jones, you got the FTSE 100, you got all of these things. So it can be really a long process to find individual stocks. So if you are new, okay, it's better to actually buy ETFs rather than actually buying individual stocks. Individual stocks only if you know the company inside out. Okay, so for example, you work for one of these companies. Okay, you work for Accenture, you work for Microsoft, or any of these companies, whatever. Again, Microsoft, they might not be Sharia compliant, but right now, but of course, you know what I mean. If you know the company inside out, then of course, but otherwise, go with ETFs. So if you're a new investor, you've got fresh money, you want to learn about the stock market, ETFs will probably be the easiest. And I'm going to share with you in the next 2-3 videos how basically some of those ETFs that are Sharia compliant that are out there that we can invest in. So before we get to that, I want to mention a couple of things that we normally look for when we're picking ETFs. There is more, of course, but I just want to focus on these things in today's video. And these are the things that I would focus on. Total expense ratio. So how much does it actually cost? So for example, Vanguard, for example, has one of the lowest prices. They've got like 0.02% of whatever your investment is. Now, some of the ETFs that are available to us, we don't have that privilege. The lowest is the ones that I'm going to share with you guys today, and that's 0.30. So through 30. Now, the expense ratio is important. So if you don't buy an ETF that has an expense ratio of 1 or 2, I don't think any of these do, and it's getting actually lower because initially when it started, I think the ones I'm going to share with you, some of them today, were slightly higher, and it has come down. You also need to know the ETF provider. It's important because some of these companies can be a bit dodgy. So you want to make sure the ETF provider is a legitimate company, okay, that is, of course, being approved by whether US, UK, whatever. You've done your research and you know who they are and you can trust them. It's really important. Then you need to know the performance. So if it's a new one, it can be tricky, but if it's an old one, of course, they just look at the performance in the last couple of years. Okay, of course, they rebalance it, they change it. So sometimes that cannot be accurate because some companies didn't have Tesla before. Now there's ETFs didn't have Tesla. Now they've got Tesla, or they've got Nvidia, or any of these companies. And for that reason, their performance will slightly change. But of course, look for that. Distribution or dividends is also important. If you're a dividend investor, some of them, they don't pay you the dividend. They take that dividend and reinvest it for you, which can be better, especially if you don't need that money. So you're not going to pay all that taxes, whatever. They take that money and, the dividend they get from the companies, they reinvest it back into the ETF. And I think that's really good. Okay, if they pay dividend, and of course these companies and the ETF provider reinvests that's absolutely fine for you. That's all you wanted to do anyway. You're not going to take that money yet until you get to a certain age and you want to do that. Also, the holdings as well. We need to see, first of all, when I say holdings, I want to see the number of holdings. I want to see the distribution. So I want to see the weighting as well. Okay, how is weighted? Is it 20-30% in one stock and the rest of them, God knows what, 2%, 1%? Or is it equally balanced, which I really prefer? So like 2-3% each company. So if anything happens to that company, you know what I mean? It's easier to manage and so on. So there are some other things that I consider. There are other things that you also need to take into consideration, but these are the things that we will focus on in today's video. And now we're going to look at the 6 different ETFs that I want to show you today. Some of these things we've already spoken about, but I'm really excited to show you at the end of the video how many of those the performance of these ETFs a year to date, all 6 of them. Right, so the first one is SIUS, which is basically US Islamic ETF. It's basically run by a company called iShares. iShares is owned by BlackRock, which is one of the biggest asset managers in management company in the US. I wish it was in the UK. But is actually based in Ireland. So this branch of the iShares that run these ETFs are based in Ireland. They have expense ratio of 0.3. Like I said, if InshaAllah, in the long run, I'm hoping in the next 5 to 10 years, we will see expense ratio of 0.0 something. That will be absolutely amazing. Right now, because of course they are managing this, making sure it's Sharia compliant because of this and that, they are basically saying for that reason, it has to be managed well. So the 0.3 is fair. It used to be 0.5, now it's 0.3. Now a year to date has this actually ETF is basically up to, so this is only for a year to date, and later on we will see how it performed for the entire year. So it's about 6% up. So the S&P 500, I'm not sure, in fact, let me just quickly check. Yeah, so about 9%, almost a 10% up since the beginning of the year. So 6.2% year to date, and it has a distribution yield or dividend yield of 1.04, which is 1%, so which is basically slightly lower than what you will get on the S&P 500. Now the weightings are Microsoft, it's almost 27%, ExxonMobil. You can pause the video and have a quick look. I'm not going to read all of it, but you can see here majority of these companies are mega companies, the companies, huge companies that have been around for quite some time. And of course, all of these companies are basically Sharia compliant side of things. Of course, there might be situations with, basically the fact that they are global companies, they might have branches all around the world. That can be an issue for basically for us at times, but at the moment all of these companies are Sharia compliant. Microsoft at the moment, it's the majority of their revenues of course is fine, but it's questionable, and the reason why it's questionable is because of the advertisement side of things, and some websites like Mustafa for example says it is not because of the gaming part, and the gaming can include there are violent scenes and sexual scenes and all of that stuff. For that reason, because of the fact that they bought a gaming company recently, that has gone up a slightly bit. But remember, what they're looking for here is not just one single company. They're looking they take this whole thing as a one single stock rather than individual companies, and then they do the 5-year basically business side of things. They do the 33% in terms of interest bearing debt, interest bearing securities, and all of that stuff. So that's something really important that you need to pay attention to. So that's the first one. Next one is almost similar. This is almost the sister company, basically ETF if you like. So same expense ratio. This is based on the world Islamic, which means they are basically getting companies from all around the world rather than just the US. It's up about 6% this year. Year to date, and distribution yield of 1.5, almost 1.5%. Now this is where I have a problem with these ETFs. They are exactly the same. Okay, so the only difference is this one has got Shell and this one has got Adobe. I think that was the only difference, but everything else is exactly the same in terms of slightly higher dividend, which is nice, but almost all the other companies are exactly the same. Even the weighting is almost the same. So 18% for Microsoft, Exxon is about 3%, and that I don't like the fact that, like I've said to you basically all these years, the fact that each one of these ETFs, so this is by the way, this is emerging markets one, slightly got higher expense ratio, and year to date it's actually done really well. It's almost 9% up, which is quite similar to the S&P 500. Distribution yield slightly higher, 2.6, although their dividend is slightly lower in terms of payout, but they are doing really well in terms of dividend side of things. But when you look at the weightings, okay, the top, basically each one of these companies is weighted more than I don't know, first 4 or 5 or all, if not all of them. So it's not great. So each one of these, so this one, as you can see, 53% is based on the top 10 companies, and then 36% for this one, and almost 50% for this one. So I really do like these ETFs. I used to hold them, okay, but at the same time I just don't like the fact that Microsoft is huge part. Like, it should be about more than 5%. It shouldn't be more than 5%, in my opinion. Right, the next one is one I own, Invesco Dow Jones Islamic Global Developed Markets, is 0.4, almost 9.5%, which is very similar to the S&P 500. And the reason is because of this, okay? They don't pay any distribution right now, but this is it. And look at this, the weighting is slightly better. Like I said, I prefer this. This is 7%, 5%, almost 6%, 5%, 4%, 2.5%. So that's better than looking at 18%, than 2%. Right? Does that make sense? 26%, then 4%, 23%. So if anything happens to Microsoft, that's huge. So if Microsoft drops tonight 20-30%, it's not gonna drop 20-30%. I wish they did, but it's not gonna happen. But at the same time, if it does happen, of course, look at that. It's a huge risk, right? So it should be well balanced, but it's not. So this one is actually better. So 7% all the way. But this is more or less basically mirroring the S&P 500. So if you look at the S&P 500, the biggest company right now is Microsoft. If you look at the Apple is the next one, then is Nvidia. So this is basically market weighting in terms of the market cap, if you like. So these are the top 10 biggest companies, and for that reason, it's actually up quite a bit for basically trading exactly what the S&P is doing, which is nice, and which is one of the reasons I bought this ETF. And I'll tell you exactly what I'm going to do towards the end of the video. We have 2 more to go. The next one is Halal, and this is run by a company called Wahid. It has 0.5 expense ratio, so the most expensive one in here. 7.85 more. This has a distribution about 0.5. I thought it was about 1%, but I don't know if they dropped it. 0.55 according to their website now. That's 0.55. And the one thing I want to say is also is exactly the same as almost this one here. So there's not much of a difference, okay, in terms of the market. It looks like market weighted, which this one doesn't have Exxon. This one has got Exxon, and then I don't know what else is changed. Okay, the Procter & Gamble, J&J. So it's slightly similar to actually one of these. So not much difference, but look at that, 15%, 11%, then 5%, 4%, 3%, 3%. Again, I really don't like that. I really don't like that. It's just too much. Is just too much. Again, 32% of their top 10 is basically 32%, and then 50% in here. And the last one we're looking at for this video is Ummah, which is basically also run by Wahid. 0.65, which is really expensive. This is the most expensive one. 7.6% up a year to date. Distribution of 0.979, and holdings is basically because remember this is similar to emerging markets, so it has a lot of the emerging markets companies. Some of the biggest basically for each country. So you got like the biggest ones in Switzerland, biggest ones in Canada, basically Japan, and all of those. Okay, and 8%, 5%, so not bad in terms of that. And the fact that you've got almost 1% dividend yield is actually okay, but the expense ratio, it is really expensive. I will not touch that. So that's the 6 companies or ETFs that I wanted to share with you guys today. And as you can see, you can pause the video here and have a quick look. So if you are new to basically investing in the stock market, maybe look into this. Okay, now let's get into this part here. This is the important part of this video. Okay, and this is what I want to share with you guys here is all 6 of the ETFs here. Okay, you can see the names and so on. I'm using, of course, I've basically decided to buy to go back to a year ago where the price was. So this is the price they were trading about a year ago. So some of them I had to convert it back into pounds because they don't have a UK base. So for example, Wahid Ummah does not trade in pounds, so I had to convert that. So I pretended I bought 100 shares of each for these prices, which is about what they were trading a year ago, and this is the result of it. Okay, and I just need you to pay attention to here basically the total here that part. So market cap, so cost, this one here cost us about 3,300. Right now it was 3,878. 578 pounds in total gains. So again, this is unrealized unless you sell it. Of course, you're not gonna so you're up about 18%, which is really good. So since a year ago you're up 18%, and that means you get dividends of £73 a year plus this unrealized gains. Total you will have made £651. So 1 year ago you've invested 100 shares of this ETF, and right now you would have £650 if you had sold it. Same thing for goes to here. Okay, you would have about over £1,000 for this one. For this one here, the basically emerging markets didn't do well last year, so you would have about £273. So not bad. Okay, Wahid, for example, you would have £790. Ummah, for example, you would have 229, and finally the Invesco Dow Jones, you would have £445. So that is total gains of 3,249. So imagine this is your entire portfolio just of these ETFs you bought a year ago. Again, remember, for the last year and a bit, the stock market has been going up, so it's not going to happen every year. If you do it now, it might be down a lot the next year, so things can easily change. Of course, bear that in mind. Okay, but you would have had, if you did that for 1 year, you would have £3,245 dividends you would have received or expected to receive about £200. Only these 3 that have paid dividends straight to you. The rest of them actually are accumulating, especially Wahid as well. I've not added that, but they are accumulating. The UK version of it is accumulating. The US version, you guys can take your dividends if you live in the US. And same, I don't think this one pays as well, and it's also accumulating. And this one doesn't pay any dividends in the UK. So the 3 that pay you can cash in dividends, okay, there are these 3 here. So that's why basically you see the 200. But overall, Total return after a year, £3,444.95. That is not bad at all. If that was my portfolio, I would be happy, knowing that of course you're beating inflation because your money is not sitting in an account. It's basically eaten alive by inflation and all these other things. And right now, the way the markets are going, we might see a pullback. And if you invested in these ETFs and dollar cost average every single week, one share of one of these ETFs and carry on for a long time, especially if you're young, you're in your 20s, and you can afford to pay, I don't know, 20-30 pounds for one share a week, then halas, just keep doing that and just forget about it. Don't touch it. That's not financial advice. That's what I would have done. So there you have it. That's the 6 ETFs that I want to share with you guys. If you are new, like I said, please always pay attention to basically doing your own research and so on, but make sure you look into ETFs rather than individual stocks. Okay, there is more information on the company's websites about each individual ETF. So they give you a breakdown of the countries and all of that stuff. So if you're interested, okay, you go to their websites and read this file here. Okay, this is one of the most important files that you will find that has a lot of information about each individual ETF. Every company has one of those. I'm not going to go through every single page of this because it's going to be, the video is almost 20 minutes long. So that is what I want to share with you guys. I have another 8, I think, different ETFs that I need to go over, inshallah, and I'll do exactly the same. If you're enjoying this type of content and you're still here, give me a like, subscribe to the channel, of course join us in the Patreon if you can, because it takes a lot of time and effort to put these videos together, and I would genuinely appreciate if you could do that for us, inshallah. Have a wonderful day. Assalamu Alaikum.